Ladies and gentlemen, and it's a big pleasure. We are here again at Mainz & Money in London 2013, and I have Frank Holmes sitting here with me from US Global Investors, and we would like to talk about now, obviously about gold, of course, about the situation on the markets, nice outlook for 2014, and some more items. Frank, thank you very much that you have taken the time. Always a pleasure. Yeah, first of all, gold is down again, 12.17. What is your view shortly about it?
Well, it's really bizarre because historically in the second months from June to December, you get this rally in gold. And this is interesting, why is it taking place? And there are two factors that I can basically try to understand that are, what would I say, dulling this run in gold that historically takes place this time of the year. And one would be positive real interest rates. That is, the 5-year government bond, US government bond, a year ago had a negative 100 basis points you were losing on your money. And only 2 months ago, you were losing 30 basis points on your money, and now you're making 30 basis points on your money. So there's a strong inverse relationship. And a year ago, you actually were losing money owning a 10-year government bond, and now you have a positive rate of return. So that makes gold not as attractive to the fear people that look at gold as money. The second part, and I just came back from India, is what's taking place is trying to stop the consumption of gold in India, but more important than the love trade is GDP per capita. It is the rise of the middle class in China and India, Vietnam, Malaysia, Thailand, etc. And the Middle East is very significant for that love trade. And when you take a look at this GDP per capita growth, it's basically gone slightly up, but sideways. And I think that's impacted additional consumption.
But shouldn't it shouldn't be affected the consumption by now already, because the wedding season started? And I think you wrote 1 million couples are going to be to marry even at one day. Was that correct?
It's remarkable. And just think that there are two Americas that in population-wise, there's 600 million Indians under the age of 25. And very different than, say, in the 70s, they now have a global footprint, and they're all slumdog millionaires. They all want that European, North American dream, and they're connected with Facebook with 1 billion people. They see what we have, and so this is what's a key factor is going to drive it. And every 3 seconds, there's another baby being born. And further, China looks like they're going to stop the one-child policy, and that will have a significant outcome because you will have 40% of the world's population having 2 babies.
Yeah.
So it's a lot of diapers, but it's also a cultural affinity towards gold that you'll see a lot of gold giving.
Yeah. So beside the gold, by the way, what is your prediction short term by Christmas? Will we go below the 1,000? No, I don't think so.
No, you could have this big shakeout. There's no doubt that Goldman Sachs has been very bearish on gold, and to cover that position, they're going to do transactions with Venezuela. One of the most despicable countries, anti-capitalistic, Marxist, that's confiscated people's rights to property. But they need money, and they're going to get that gold, physical gold, out of Venezuela back to New York. And so that puts them in that picture so that they can still be short. So I think that from that end, but historically gold is up in November, it's down. Historically up in September, it was down this year. You get these huge computerized flash trades and then canceled that seem to knock the price down. But this is part of cycles. We've had a spectacular run, and you're due for a rest. What the positive parts will be is that a lot of these gold mining companies, which have not been disciplined at cash flow and returns on capital, will now all of a sudden start to shrink, get gobbled up, or basically unwind. And therefore, when I look out 3 to 5 years, when there's going to be another millions of babies being born, there's going to be less gold supply.
Yeah, absolutely. And let's walk a bit apart from gold. Let's see more the big picture, because we were talking about India, China. You already said there will be more and more babies born, and it's right, not only diapers, they want to consume. They want to have a car, a phone, whatever, yeah? So where do you see the big drivers are obviously Asia, but where do you see the overall picture, let's say, for the next 5 to 10 years for resources? And what resources you really like?
Well, you have to first of all learn to say Namaste and Ni Hao Ma. Get used to that, because that's 40% of the world's population, and they're embracing free markets like we've never seen before. I think it's important to look at PMI. This PMI, the acronym stand for Purchasing Manufacturers Index, and it is a leading indicator for job creation and the use of commodities. So a year ago, you had the 1 month global PMI below the 3 months. So you had stagnation is basically taking place. Now we've had a turn, and yesterday's numbers came out that the global PMI is extremely healthy, and it's rising even faster, where the 1 month is above the 3 months. And I thought what was really interesting, the greatest buy ever for emerging markets was back in June, when they were going to pull away the punch bowl for basically flooding the system with lots of cash, and emerging markets fell dramatically. But then Germany came out with the global with their PMI, turning positive, and then France, and then China, and then America. So it's usually 3 to 6 months ahead, and then I think you're going to see copper all of a sudden get picked up. Historically, copper is a buy in November. They say sell in March. With global PMIs turning positive, I'm very constructive. I believe in iron. I believe in, as I said, iron. I believe in metallurgy coal. I think that's going to be a key component. Now, I think that get natural gas, you're going to see natural gas looks like it's going to rise here in the U.S., which is very positive for its economic development.
How do you rate uranium?
Well, uranium is interesting because the 1 month is not above the 3 month average. So it still is trying to find its bottom. There's lots of noise around that there'll be a pickup in China, there'll be a pickup in that, but we've not seen it yet. So I like to have that trend as your friend, where that 1 month is above the 3 months and the volume starts to expand. Now I'll tell you something that's really interesting with the gold. With the gold declining the way it has, silver in sentiment has also declined. Platinum and palladium have declined. However, unlike gold is experiencing net redemptions out of the ETFs, but silver is growing. Platinum is growing. Palladium is growing. So that was, they would say, like an on-balance volume open interest is expanding for the need for these other commodities, and that's another fact that's important because it's correlated to PMI. Industrial production is growing.
For the real use.
And when gold has this rally, which is mathematically due, when it happens, these other commodities will have a much greater move.
How do you rate tin, for example, or tungsten? Because I think there are also some imbalances in the market very soon.
Well, tungsten is so important when you're taking a look at medical equipment, especially for any type of radiation equipment and arms, any type of military buildup. That's rumored now going to be taking place in Asia. That's always important to have tungsten.
Yeah, absolutely. And and tin. You have an opinion to tin?
I don't have an opinion on tin of any real great confidence. It's there's other commodities that are much more significant, and I think it's important to look at Freeport-McMoRan. It's doing exceptionally well relative to Newmont. Both copper gold, but there's more copper to gold ratio with Freeport, and as a stock price, it's doing exceptionally well and has a lower cost structure than Newmont. Now with gold going to hit to 1,200, something like 90% of the gold producers out there are going to start losing money.
Oh yeah. Oh.
So who's going to make money? Alamos Gold, Rand Gold, and then the royalty companies. Franco-Nevada, Silver Wheat, and Royal Gold. Those companies are profitable in this move that's the lower prices, and I think it's a wake-up call that you're going to see a lot of these junior mining companies all of a sudden start cutting, laying off people, and restructuring to get their costs down.
Yeah, but they have to, obviously. That's for sure. Yeah. How do you rate dividends for the future? Because I was suggesting some years ago, guys, dividends could be an item for the future. How do you rate this for the future?
Well, I think it's very important because many of the mining companies have recognized that the bullion ETF is easier for investors to go buy that than buy the stock, unless the stock has a coupon with it, and unless it's going to share some of that yield. And there's been some arrogance with these mining companies of not sharing that return on capital and lavishing themselves with lots of stock options, lots of bonuses, and there's nothing for the shareholders. Yeah. So I think that you're seeing many CEOs have lost their jobs. I think it will continue that's positive and constructive going forward. That's what I think, and I think you're going to see companies like Alamos Gold, which has a strong dividend policy, lots of cash on their balance sheet, Rand Gold. These companies will do exceptionally well.
Yeah. Also, what I like the dividend model of Newmont, because I think it's outstanding what they have created there, isn't it?
Yeah, but you know what? I'd rather own Silver Wheaton for its dividend model because they have free cash flow.
Okay,
And
that's
Newmont has no free cash flow.
Yeah.
So it'd be better, when you buy Franco-Nevada, you basically get the royalties on Newmont's assets. So why not buy Franco-Nevada with 70% profit margins with a monthly dividend policy? And you take a look at a model like that, it's far superior than owning Newmont.
Yeah, absolutely. Let's go beside the dividends and beside the stocks now. What I'm really interested in is, because I would call you like a world citizen. You are everywhere in the world. You are based in the US, of course. How do you rate from your view far away as a US citizen, as a traveler of the whole world, the European situation, the debt situation, the situation like we still don't have a government in Germany. Yeah, we still wait since 3 months that they consolidate everything here. How do you see that? How do you see the future of the euro even?
Well, actually, I'm a Canadian. I've been in Texas now for 23 years, so they call me a Tex-Can. Y'all come back, eh? So how do I look at it? I think one of the big parts is that rates are not going to be able to rise until governments recognize that they have to change their fiscal policy. That the fiscal policy is strangulation by regulations. And any rise in interest rates with the amount of regulations to do anything in Europe and also in America, it makes it very difficult for economic activity to take off like you had 2003, 4, and 5. So I think that that's a key factor. What you are seeing in America with the Tea Party, and it gets lots of negative news. Well, really what it is that people that are paying taxes, they're saying, show me what I'm getting for it. They want accountability. And they get painted as a real negative outcast. Now, there's some religious ones that are in there, but I think in principle that they're very concerned, if I'm going to pay my taxes, show me what you're going to give me. Yeah. And I think Europeans have got to learn to do that. They've got to push back against governments turning around and creating jobs by excessive regulation to justify all this job creation for government workers, where that the government workers in Europe are getting many more benefits than someone that's working like you as an entrepreneur, taking risks in your business, and why should you do that? So I think that that's the biggest thing besides Germany having who's going to be in political power, etc. It's a thought process with the policymakers.
So you think they're going to make it in Europe and the euro is going to make it?
Yeah, I'd bet they're going to make it. And I think that there's a spirit, and I think that just sometimes it just takes longer. Mm-hmm. If you take a look at America's history, from Prohibition until they saw the disasters of Prohibition, that Al Capone came along and they had to stop it. It took 10 years to change. Sarbanes-Oxley, finally 12 years later, they're making changes to Sarbanes-Oxley in the severe regulations. Traveling on an airplane now, they're finally, TSA is making changes 12 years later. So I think you just have to take a look at the process. Hopefully it can go faster, that they can streamline regulations, because that's what's important. Under President Clinton, you had a surplus budget. You had positive real rates of return, and he went after welfare, the deadbeat dads. He had social welfare reform. He had deregulation of telecommunication. And all the new billionaires, the Carlos Slim, the richest man in Africa, all these people came from the telecommunications, which is a combination of deregulation and unleashing the internet. Yeah. So we need that thought process, and then I think you'll see rates can rise and economic activity still can remain healthy.
Okay, so my last question would be, how do you rate for next year? Like, what is your target in the main markets, like the Dow Jones, like the S&P? And what would be maybe some targets on gold, silver, and maybe copper?
When I do what you're asking the question, I like to look at the DNA of the volatility of each commodity. They all have their own unique, 70% of the time they can go plus or minus, like gold, 15%. That's its DNA volatility. The S&P 500 is 20%. It's a non-event to go plus or minus 20%, and I think that's what's important to take a look at copper, etc. Now, when you have the PMIs turning positive, odds favor between 40% and 70% of the time you get moves of 25%. So I think from a commodity point of view, right now the wind seems to be at our back. A year ago, the wind was in our face. Now, as it comes to the stock market and what you're seeing in America, is how capitalism is a sporting event. You just remember, it's a sporting event, and it adapts and adjusts and realigns. And what you're seeing is that the S&P is actually shrinking in number of shares outstanding. That's another reason why it's going to all-time highs, because there's many companies that are buying back their stock and increasing their dividends. They're not giving out stock options. They're granting you stock over 5 years, and you get the dividends all up front. So your interests are now aligned with mine. So what do you think all these executives are doing? They're raising the dividend, they're buying back stock, and that's called the total yield. And some of those funds, one of our funds, the All-American Fund, focuses on that, and it's had spectacular returns. And I think it's going to continue. IBM, one of Warren Buffett's stocks. Do you know in the past 10 years its revenue is unchanged? However, on a per share basis, is doubled because they bought back 50% of their company. So stocks will rise on revenue per share, earnings per share, and dividends per share. And I think there's much more corporate discipline for shareholders of doing that.
So my last question is, how do you rate the resource stock markets? Do you think there's a chance for a turn now after 3 years downtrend?
I think it's the most underloved, underappreciated, and under-owned when you look at asset allocation by pension funds, and it just shocks me because the dividend yields on many of these resource stocks are substantially higher than 5-year and 10-year government notes. Oh, yeah. So when you have the backdrop of 7 billion people, every 3 seconds having a baby, there's going to continue to be a need for these resources. What we are seeing in America is MLPs for the build-out of the infrastructure for the fracking, the pipelines, the taking wet gas and turning it into oil, etc. That has been very robust and growing rapidly. So there are certain areas which are very strong. When you look at the cash flow multiples for companies in the major basins where they're fracking, they're trading at 10 times cash flow, and some of these stocks in our portfolio were up 80% in the past year. Now, what we want to point out to investors is that takeovers are between 80 and 120%. So I'm a big believer that the cheapest reserves are in the ground. People used to say, so no, they're listed. Because the takeovers are not 20 or 30% premiums, they're 100% premiums, which just goes to show that this asset class has much more upside than it is downside.
Well, that's a perfect final sentence. Frank, thank you very much. Wish you Merry Christmas, all the best for 2014. And thanks for the interview, of course. Thank you. Ladies and gentlemen, it was Frank Holmes from US Global Investors. You heard it. He's positive for next year, positive for the resources and the resource stocks. So do we. So we wish you all the best. Thanks from London, and bye-bye.